Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has regained bullish momentum as it approaches the 60-day simple moving average. After challenging the area 66.75 to 67 figure, we do need a little bit more to support the upside, even though the bullish divergence has strengthened the bias, and a clearance of 67.15 and the close of New York could see further gains on towards 67.65 or possibly to around 68.15, with the support on any pullbacks seen at 66.75. Meanwhile, the US dollar index, which measures the greenback strength against a basket of six major currencies, reached an 11-week high of 103.74 overnight, following strong retail sales data that exceeded expectations, enhancing confidence in the US economy. Fresh data confirmed steady growth, supporting predictions for a 25 base point rate cut at the Federal Reserve's next meeting in November. September retail sales rose by 0.4% month over month, slightly above forecasts, while the weekly jobless claims unexpectedly fell by 19,000 to a seasonally adjusted 241,000 for the week ending in October 12. So as I mentioned, the technicals are firming, but keep an eye on this key level around this 60-day simple moving average. As widely expected, the European Central Bank, or the ECB, cut 25 base point interest rates, lowering the rate from 3.65% to 3.40%, while offering minimal guidance on future discussions. This marks the ECB's third rate cut this year as it shifts its focus from controlling inflation to supporting the EU's struggling economy. With the technicals oversold extremely with the RSI and an overheated ADX, I do feel that we are getting quite close to the bottom, and therefore from around 108.25 may see a bounce that could lead on towards 109 or even possibly to that point where it broke down earlier of 110.0515. As the dollar yen squeezes higher, there is clear bearish divergence from the RSI and the MACD that could see further weakness into the coming session. I'm a little bit cautious here because we could see a snap back towards 148 as a potential target and a cap around 150.30.50 area. The pound was also a little bit firmer overnight and rebounding off the level of 129.60 and now looking towards that topside area around 131 to possibly 132. I feel that the dollar index is slightly overcooked now, and around 103.80 to 104 may find a sudden turn in its trend and therefore support some of these calls that I'm viewing. And looking for any bounce, well, if we see a return at 129.60 for the pound, then we should see again demand. Technicals are firming up, and also with some divergence to support the bull case, may see any weakness to quickly fizzle. Turning to commodities, the precious metals remain volatile as spot gold reaches its target and also a record high 2,700 amid rising expectations for further rate cuts and uncertainty around the November the 5th US presidential election. Overall, though, with the technicals still remaining somewhat bullish, the target to 2,700 may extend on to 2,740.60 before any turnaround or profit taking. So if you are trading, still continue to monitor signals and also adjust your risk management accordingly, just in case we do see a snap to the downside. So support, well, with this trend line is seen roughly around 2,650 to 60 area. Wrapping up with oil, we've got a dragonfly doji that could support further gains into today's session and moving away from the base of 69.70 or $70 a barrel and looking up towards 71 to 72 and reassess from there. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report and I hope you enjoy the great start to the new weekend.